tech stocks and tech assets today are the best way to beat the markets, right? So everybody who wants to grow wealth in this economy has to seriously look at tech stocks or other kinds of technology assets like digital assets. And I basically spent the last 2.5, 3 years looking at the investing world. And I really looked at a lot of studies and a lot of charts and history. And whatever paper I read, whatever statistic I read, whatever calculation I made, this was kind of the outcome that today, as we're living in the age of technology, also technology has become the number one possibility to outperform the market, right? So all of us are somehow looking to best invest our money and to grow our wealth over the long term. And tech did not just change the economy that we're living in. If you look at the last 25 years in particular, how fast-paced change has become, it has also changed the very nature of investing and the very nature of making money and growing your wealth. And, everybody of us has lived through this transformational period. If you just look at who is running the global economy, it's the tech giants. I have a chart in the book where I say, I compare the biggest companies back in 2004, 2005 with the biggest companies today. And back then, there was just one tech company among the top 10, according to market cap. This was Microsoft. If you look at the same chart today, you have 9 of the 10 largest companies being tech companies. So we are living in a tech economy, and it's not just another set of companies that has taken over the economy, but also the size to which companies have ballooned is dramatic, right? Because back then it was General Electric who was heading the list with some $300 billion of market cap. Today we have NVIDIA north of $5 trillion, and we have others like Microsoft and Apple that are very close to this. And just to put this into perspective, if you compare the market capitalization, which means the value or the worth of a company with the GDP of major global countries, there's actually just 2 countries in the world that are larger than those market caps, which is obviously the US and China. But it also means that the entire economic output of a nation or a mega economy like Germany or the UK, or also that the entire economic output of more than 1 billion Indian people, for example, would not be enough to buy just one single company. So tech is really running the world, running the economy. It's running the financial markets. Financial markets are between 1 or 2/3 dominated by tech companies, depending on what you define as a tech company, but at least 1/3, but also up to 2/3 of the whole value in stock markets are basically tech companies. And that's the economic side. We have all seen this. We have all lived through this. But also, as I mentioned earlier, the nature of investing has changed, and the nature of earning a decent return on your money has changed. And that's very critical to understand, especially for the middle class today, who is trying to, preserve their income and their wealth in an age of very high inflation, in an age of overtaxation. And the best way to do this is to understand those new rules. Because if we look at the history of investing, modern history of investing, starting in 1945 with the end of World War II, because that's what matters to us, there has been one big paradigm of investing that has pretty much dominated the 20th century, and it's called value investing. Everybody, even those people who have nothing to do with investing, will probably know the names like Warren Buffett. Maybe you've heard about Ben Graham, Charlie Munger, Howard Marks, all of those big, larger-than-life investors. They were all value investors. They were all part of this one paradigm and this one school of thought that basically what they tried to do is to find cheap companies. So they looked at companies where their book value, which means the value of all of the machinery and plants and the hardware they had, was simply undervalued, and when their stock price was not reflecting that. And then they bought up those companies and sold them once they returned to the mean or once they were overpriced by the market. And that's how they were able to beat the market all the way through the 20th century. And if you look at it statistically, those type of value stocks, as they're called, and compare them to other growth stocks, which are stocks that on paper don't have such a big value, but you expect them to grow multiple times in future. When you compare that, it was always those value stocks that were winning. But something radical changed around the year 2000, maybe in the late 1990s, with the advent of the internet and the whole digital age. Actually, it's more the internet, because the digital age started in 1971, officially with the first microchip. But really in the 1990s, it was where the internet proliferated throughout America and then later throughout the world. And all of a sudden this also changed stock markets, right? All of a sudden those value stocks were underperforming those growth stocks. And, value investors said this is just a temporary setback. That's just a bubble. It's just a prolonged bull run. But what happened actually, if you look at the past 25 years, that those growth stocks or tech stocks were year after year after year outperforming those traditional value stocks. Even more so, they were exponentially times better performing than the other one. And every year with every new technology, whether that be mobile, whether that be cloud computing, now obviously with the age of AI, those tech companies are just multiple times better performing than traditional value stocks of companies like energy companies, utility companies, also hardware manufacturers, car manufacturers, and so on, retailers. They're all still solidly performing, but they have never been able to, counter tech stocks. That's why we're living in a completely new age today, and everybody who's serious about growing their net worth and preserving their purchasing power and maybe a little bit more, I believe, has to dig in to the age of tech and learn at least the basic rules of how investing today works. That's very important, not just to grow your money, but also to protect it, because tech also introduces a number of risks into the equation that haven't been there before, because many people have in the end burned a lot of their, burnt their fingers on tech stocks and tech assets.